Oh man! Holy smokers! Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a meet Kevin ball fluffer. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And I am a lover of Chipotle stock. It's going to 10x, bro. You should buy it now, ladies and gentlemen. Woo-hoo-hoo-hoo. So who am I? Well, if you don't know who I am, my name's Christopher Belly, and I have 95% of my money in index funds. But when I see an opportunity to 10x my money, I cannot resist. And one of those stocks is Chipotle, bro. Let's go ahead and look at the price action after hours. Why don't we? So here I am on the scam website Robinhood. It's a scam company. And we can see that Chipotle, my rubber boatlay, is up 8.66% after hours. Holy smokers! Now, this is a pretty expensive stock, both based on the numerical value and based on the price to earnings ratio. Let's look over the past 5 years. This stock is up 314%. Now, I love Chipotle. As a matter of fact, I went there yesterday. You know what I had? I always get a burrito. I get white rice, black beans, steak. I get the hot sauce, lettuce, tomatoes, sour cream, and cheese. And that's all I get. And the burritos are so big, they actually fill me up. Because a lot of restaurants you go to, you're not even freaking full when you're done. It pisses me off. Chipotle is amazing, okay? But does that mean it's a good stock? Well, let's go glimpse the earnings a little bit, okay? Let's read Wall Street's expectations. Wall Street, financial advisor. Chipotle reported weaker than expected sales for its second quarter. Is that revenue my avenue? Although higher prices drove strong profit growth. Facing higher food, packaging, and labor costs, Chipotle said it would hike prices again in August. Fortunately for Chipotle, the majority of our customers are a higher household income consumer. Blah, 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 blah. That's true. I mean, I'm a YouTube grifter. I go there all the time. So, the only thing I really cared about from these earnings was what the quarterly revenue was, because I use that to put that into my model so I get the accurate trailing 12-month earnings, and then I can project that forward into the future. Should you do this? Should you copy my model? No. I made this in 15 minutes over lunch. What my model does is it gives me a general idea about whether a freaking stock is overvalued or not, okay? Let's go look at the financials of Chipotle. So, if we look at revenue growth, okay, they've had some explosive revenue growth in 2021. If you go back a couple years, 14%, 8%, 14%, 7%, 26%. They are growing super freaking fast, okay? However, I feel like 2021 is probably a little bit of an aberration. And I don't think Chipotle is going to grow at 26%. Going forever into the future. So I'm going to be a little bit more conservative with my revenue input, my revenue growth assumption over the next 5 years. All right. Is this company profitable? Well, it's got a decent gross margin, double tattooed chefs, by the way. And it's got a bottom line profit over the last couple of years. 4, 3.5, 6, 5.9, 8.6. Now, like I said, I think this is an aberration. I don't like when I see a stock have massive revenue growth like that. However, did they have any kind of acquisition? Let's see. Capital expenditures, they seem a little bit higher than the year before, but nothing crazy. And some change in investments. That's investing cash flow. They also bought back from shares. You can see that because the number's negative. And they've had pretty insane operating cash flow growth. I think this is a temporary thing. I mean, look at the freaking explosion in operating cash flow. Look at the explosion in free cash flow per share. Does that seem normal to you? I wonder if the market's actually pricing this in to grow at an insane rate. Look at the freaking revenue growth. I mean, holy crap. This ain't normal. So, let's go ahead and look at some ratios. PE, the current PE is 55. It's a little rich for this kind of business. I don't know. Price to books, 17. Price to free cash flow, 45. Okay, the debt to equities, okay, I guess. Debt to free cash flow, not too bad. And pretty high in return on invested capital, return on assets, return on equity. So overall, like, it's not a horrible company. I mean, obviously, it's been profitable for a very long time. And they're really not diluting shareholders that bad. They diluted a little bit, but really not that bad. And this is the data ending in 2021. So what I did is I took the quarterly revenue, because they haven't updated this yet. I hate when they don't freaking update it. And I added up these three, and then I added up this, and that gave me the trailing 12 months of revenue. So I went ahead and plopped that into my model, okay? And this is Jeremy the Fifi. So they roughly have $8.18 billion of trailing 12-month revenue. Current shares outstanding, roughly 28 million, which is actually low. That's why the freaking stock price is so high. I mean, it's not because it is expensive, but it's also a high stock price because they don't have a lot of shares outstanding. That's why. But it's so expensive, strong man. You can buy a fractional share if you want. Okay. Discount rate. This is an insanely high discount rate. Why do I use this? Because I'm not buying an individual stock unless I think I can get a great freaking deal. Okay? So, my discount rate is 15%. I want a 15% rate of return. If I can't get that, I'll just buy a VT, baby. Revenue growth assumption. I'm going to say 6%. 6% revenue growth. They had an explosive year. And if you think over the next 5 years, I think 6% is pretty conservative and reasonable. I mean, you can use 7, you can use 8, whatever you freaking want to do. Okay, I'm not going to spend 20 years analyzing freaking Chipotle. Let's look at profit margins. All right, profit margin 3, 6, 5, or 6, 8, 8.5. So I don't think 8.5 is going to be normal. I mean, obviously they have rising costs, so they have to raise prices. But I don't think that kind of profit margin is going to last forever. I would say 5 or 6. We'll go with 5.5 to be conservative. Okay. I can look at free cash flow because I like earnings. And PE at disposition, we're going to do 15%. Why? Because that's the market average. And a company that's growing at 6%, I mean, the PE of 15 seems pretty normal. All right. And remember, the PE at 15 is 5 years from now. It's not right now. Obviously, the PE is much higher. And let's see what else. What else we need to look at? Share dilution. All right. They're not really issuing shares, and they'll probably slow that down. So we'll just say 0%. And look at the freaking buy price that I get for Chipotle. $223. Now, you may say, oh my God, there's something potentially wrong with your model. No, I think Chipotle is massively overvalued. Now, if we go ahead and punch in these insane numbers, let's look at the, let's say we put in 15% revenue growth and 8% profit margin and a PE of 25. Oh, still not a buy. The market, I don't know, man. Call me freaking crazy, but I think Chipotle is in a massive freaking bubble. Okay, the market's discount rate is like probably 8 or 10%, something like that. Even then, it's like crazy expensive. 20% growth rate, 9% profit margin. Okay, so basically, you have to have a discount rate of 8, revenue growth of 20% over the next 5 years, profit margin of 9%, and a PE of 25 at disposition, and it would be a buy at $1,200. But I don't freaking get it, man. I mean, even if we did 7% here, and we did a profit margin of, let's say 7, and we did a PE of 20, the stock is massively overvalued. And like I said, this is just a very simple tool. Some companies, look a lot better when you put them in here. Companies like Chipotle are obviously massively, massively overvalued, at least in my opinion. Let's see, 15% rate of return. Yeah, I wouldn't buy this stock until it crashed down into the 300s, 200s, or even consider it, okay? But yes, I'm using a very high discount rate because I'm not an individual stock investor. I'm an index fund investor. This is a hobby and a pastime for me. So, what are your thoughts on Chipotle? The food's good. Let's see. Omegle. I'll make one. Looks like it's just me and you, baby. I like bussy content. Show the LaFufu trucker video. That doesn't really apply in this. Like and subscribe, people. It's not that freaking hard. That's right. Hit the freaking like button. Let's go. Pump it up. Pump it up. Pump me, baby, up. Pump that chest up. Chipotle. Most Southwest Grill is better. I entirely disagree. I think Chipotle is the king. But that stock, oh my God. I don't know what people are thinking. Chipotle would be a big risk to buy, but valuation a bit. I'd say it's more than a bit frothy, man. I mean, holy freaking crap. Chipotle better than VT. Yeah, go ahead and put all your money in Chipotle. Okay, I'm sure you'll do great. It went up. VT didn't go up today, did it? They don't even have cauliflower bowls. Why would you want to buy this? Let's see. There you go. Screw you, strongman. I'm going to go buy Financial Fortress now and lose all my money buying Tattooed Chef. You should, man. And then you'll lose money buying Tattooed Truckers, Putrescent Nutsack. Does Financial Fortress have a moat? A moat? If Chipotle has a 55p and trades it over 1K, then Tattooed Chef should 100x since it doesn't even have a P. I don't know. This company is like crazy, okay? I don't even know what to say. Tattooed Chef's up 3% after hours. You are finished. That's right. I'm a loser. At 50 plus PE on a restaurant. Bubble confirmed. Yeah, I don't know how anybody can look at this and not say it's a bubble. I'm sure there's some people that don't like strongman personal finance. You don't understand. Shut up. You're right. A lot of these people freaking like, oh, just do stuff for me, strong man. Be my little biatch. It's like, oh my God. Pay me. Anyway, that's it. No, I don't think Chipotle is a 10x stock, but you know, if you want to buy it, you go right ahead. I'm sticking with VT on this one. New shades. Did your wife get mad at you for stealing her glasses? I actually don't know where they are. She doesn't mind. You know, I'm paying the bills doing this. See this super chat here? See that money? You jealous? You jelly? Bones? Bones on fire? That's right, boy. Anyway, don't forget I got a seminar this weekend. 10 a.m. Eastern, financial statements. If you're interested, shoot me an email. Pay me $50, and I will grift you massively. Talk to you later. Cheers.